Hi, Tim Bigham for Delta Derivatives, option hedges and edges, powered by the best option scanning tools on the market today, rbtrader.com. Looking at a market that does not seem to want to power to all-time highs here, certainly. Last week we saw it, basically trade from the low end of the range all the way up to the upper end of the range, but that 2100 level on the S&Ps certainly seems to be major resistance. Until we can get through there convincingly, I think this market is probably a market to be sold on rallies and, kind of bought on dips. I think it's, again, we've been talking a long time, but that, low interest rate environment, we're looking at, the 10-year yield somewhere below 1.4%, 30-year under 2.5%, worldwide interest rates, a lot of them well below zero. So interest rates providing that underpinning, valuations providing kind of that overhang. So I think it'll be kind of what I call a dire straits trade here, money for nothing, where you can sell out of the money call spreads on rallies, out of the money put spreads on dips, use those levels 2100 and 2040 to kind of structure the strike prices. But staying a little shorter term and tactical, opportunistic sort of trades here, using those arbitrator option scanning tools. Saw some huge buying in Cypress, CY, semiconductor stock over the past week and a half, all in the short term July options with earnings coming out early August. This is certainly aggressive short-term buying. I think they're looking for a breakout on the chart here, and I'm noticing a lot more of kind of the technical points being played now with options, especially call options on breakouts to the upside, where the big players will come in and buy a bunch of options, gain that leverage, get that gamma for them if it does break out. If it doesn't, they have a small loss. So I think they're using options to position at breakout levels. I conversely, as always, like to, kind of take advantage of those overpayments. So the trade we've been doing here is buying the August 10 calls, selling those comparatively overvalued July 10 calls, just looking for that term structure, which was relatively flat and should favor the August to come in a little bit. Right now, it's still trading about 12 points expensive, so I like that term structure volatility trade. And then on a straight out option trade, PayPal is one that saw a huge option volume over the past week and a half. Stock has been hit the past couple days, so I'm jumping in, but moving out to October. The big boys have been playing the Julys and the August, so I'm buying the at-the-money October calls on PayPal, just positioning along with that big call buyer at a much lower implied volatility. So until next time, this is Tim Bigham, and especially in this kind of market environment, keep those stops in place. Here's to good trading.